Guys, there's a path for you to retire and be worth millions and millions of dollars. It's a simple process, but it's not easy. I'm going to show you the way, and my goal is to make sure you retire with millions of dollars in your real estate portfolio. It may sound daunting, but all you have to do is buy one good property per year, and let me walk you through how simple this could be. So guys, this is our real estate calculator on our software. If you look right here, let's pull up a deal. I did a video recently on a rental property I'm buying on a lake in Texas, okay? Now, let me make this a little bit bigger. First off, very simple here. I put in my number of units, appreciation rate, vacancy, purchase price, etc. Then I go to the income level. I type in exactly the income I think I'm gonna get per month and any other income I'm gonna get. In this situation, boat rental, jet ski, etc. This is where you put all your information. Remember, guys, real estate is not some complicated thing. Everyone overcomplicates. I laugh so hard when I see these big syndicators sending me a deal. And it's so funny to me. I recently was pitched a deal for $37 million. Now, the ironic part is I had offered $35 million on the same deal. These guys sent me this complicated Excel sheet. And at one point I looked at them and said, guys, one part of this Excel sheet says you owe $30 million in the deal. Another part says $34 million. Which one is it? Well, Paul, if you look, keep it very simple. Money in, money out, what do you owe? The reason they make these deals complicated is if they do complication, it makes it look like they tried really hard. So the deal doesn't go well. You know, look at our deal here. We sat there and we did the numbers. It doesn't need to be that way. Keep it simple, stupid. That's why we do it. And we use this program every single day. The funny part is we sat there and did the deal on this simple sheet and came up with a better price than they did. And then when I pointed out their mistakes in their analysis, they went dark on me. So I'm looking at going, okay, they're overpaying by $2 million in my opinion, and they had a complicated Excel sheet. Doesn't work for me. So anyways, next step, what are your expenses? Now, you can do it one of two ways here. You can either put a flat amount per year, which would allow you to do it here, or you sit there and break it all down by line item. Whatever you choose to do. The more experience you have, probably the more general you can be about a high level expense. But here, property taxes, management fee, leasing commission, insurance, all the way down. That's what I love doing. Okay, next, your mortgage. Input your mortgage information. How much you're gonna borrow? What's your interest rate gonna be? How long is your amortization? All these things matter because every investment, the present value of all future cash flow. So what you're trying to do in this sheet, and this program is determine what those cash flows will be in the future, how they grow, how they decrease, etc. And very simply, recap report just gives you the breakdown. Revenue increase, expenses, NOI, mortgage payment, your cash flow, the value of your property, and your mortgage balance. And then your IRR sheet, boom. And it tells me, Paul, you expect to make 18.4% IRR over the next 20 years. That's simple. Now, the hard part of all of this is keeping it simple. Everyone wants to sit there and make things so complicated. Guys, I'm here to teach you this because I want you to keep things as simple as possible. If you've ever thought about real estate, I don't care if you're not even buying close. Do me a favor. If you want to learn about this, like the video, subscribe to the channel, and tell me in the comments before what your history is with real estate. If you have no history, why you haven't gotten into it. I want to hear these things. And for the next few months, as our channel grows, I will personally be responding to the messages and the comments in the video. If you see a PG at the end, that is me commenting. There is no BS there, so please do me a favor, subscribe and comment in the video. Now, this is 18.4%. That's high. I'm looking, when I do a real estate deal, depending on the deal, I want it to be between 14 and 16% return. So this could be a good deal for me, but I won't know until I do it. So let's break down this math. Now, let's say you're able to get that 15% return per year, okay? You can compound at 15%. This is why real estate deals should do better than the stock market, because in real estate, you can't exit quickly. You're stuck in one place. If it doesn't go well, you're stuck with that property. Buying takes a long time, selling takes a long time. That's some of the negatives of real estate. The positives are you're not worried about the market fluctuations on a daily basis. You're not getting as emotional. You can go personally and change the outcome of a property. If a property isn't going well, you can come into our community, explain your problem. I can help you, others can help you, and get you to a better path for success, okay? But let's assume you're able to make 15% per year. So 15% a year, and let's assume it's 30 years, okay? Let's say you're 35 or 40, and you sit there and say, you know what, I have enough in stocks. I want to be able to invest $25,000 a year into real estate deals. Now, I'm just saying that, I'm not assuming it's only your deal. If you bring partners on to buy a bigger property, I'll get into that into later videos. But let's just say you're going to invest $25,000 a year for 30 years. Okay? Not going to bore you with the math here, but here's what it looks like. This comes out to $10.868 million. Guys, and this isn't real estate value. This is your net worth in it. If you take all the cash flow, reinvest it, do all of these things, if you reinvest the cash flow, you can have a net worth just on real estate deals at $25,000 a year for 30 years of $10.9 million. Now, why don't more people do this? Well, I'll be honest with you. When I meet people who have real estate and I ask them what their returns are like, they tell me this number. And then, of course, what I do is say, oh, cool, what'd you buy the property for? What's your cash flow? And I realize their number's a lot lower. Everyone thinks they make more money than they do. That's the value to this software. This software will tell you exactly the return you're making and the things you can do to get better at it. Now, another thing I didn't mention, that $25,000 a year is great, but every 5 to 10 years, your property value will go up and you'll pay down more mortgage. And guess what you can do? You can refinance, get a check from the bank tax-free, and go reinvest in a bigger property. Let me show you what I mean by that. Let's say you buy a property for $300,000 and you put 20% down. So you're at $240,000 mortgage. 10 years from now, the property's gone up 4% a year. Just to make it simple, let's say the property is worth $450,000. But 10 years later, that $240,000, now you owe $200,000. So you have $250,000 in equity. If you take an 80% mortgage here, you're gonna have a mortgage of $360,000. Paying off a $200,000 mortgage from what you owe, you get an extra $160,000 tax-free. Plus your $25,000 you want to invest that year, you can go invest $185,000 into a new property, a bigger property, and really compound that growth. Guys, I want you to know, I started with a 2-family in Toledo, Ohio when I graduated college. Now, granted, I had some money to start out with, but from there, I now own and operate 1,000 units, and we will, in the next 5 to 10 years, have 5,000 to 10,000 units. We just closed on a 200-unit property. I know how to buy a single-family home. I know how to buy a 300-unit property. My biggest property ever was 311 units. My smallest property ever was a 2-family. It's all the same at some point along the way. Are there different ways to look at them? Absolutely. But here's a spoiler alert. I want you to get good at this because the bigger the property, the easier it is to manage, the more money you will make. That's what people don't realize. And on bigger properties, I love renovating them. I truly have an addiction to buying real estate. This is why you need to, I'm not one of those guys like Dean Graziosi who's never owned a piece of real estate, doesn't know anything about it. I'm here, I own 1,000 units, I manage them. My manager of all my properties is literally in the office next to mine, and we speak daily about real estate. That's what I want to help you out with. So guys, if you like this, remember, subscribe to the channel, comment below. I want to hear from you. I'm going to be very active on this channel as we grow. And want to watch the next video on a step-by-step guide to investing in real estate? Just wait for it. Thank you very much for your time.